The US government is in shutdown, yet the markets are making new all-time highs and Bitcoin is following them close behind. As we said in our last video, the shutdown often caused the low and the markets surge higher after that. Trump's talking about a $1,000 to $2,000 stimulus package for all US taxpayers, which would bring a huge amount of liquidity to the markets and drive new retail hype, which is what we have been waiting for. Is that going to happen? We'll discuss it in this video. And also, what's happening with the Fed? Are the Fed rates coming at the end of the month? What's happening with the altcoin ETFs? Are they still happening? We're going to discuss that in this week's video. This one's a macro update as well. So we're going to go through all of our macro crypto charts to see where we are in the cycle. And then we're going to check out some altcoin charts as well. So if that sounds good to you, come jump in for the ride and check out the monster move on Bitcoin this week. Here we go. Okay, so it set a new all-time high of $125,696 per Bitcoin. What a time to be alive, eh? Okay, so when all the bears were getting super bearish last week, when we was in this wick, okay, and everyone was telling you, well, people online on X and in the comments of YouTube, in the pits of the bears, they were telling you it's over, the cycle is done, it's cooked, we are cooked. We is heading into a US government shutdown, and they was being fearful that that was going to call the breakdown of the markets. But no, the stock markets are in all-time highs. Bitcoin's now in all-time highs, and I think we're soon going to see the altcoins follow. Does Bitcoin dominance take a move up for temporarily while Bitcoin takes a rally? Possibly, but the altcoins will be following shortly behind, and then I believe we will see the breakdown of Bitcoin dominance and altcoin surges coming soon. So when everyone was getting bearish, right, on this channel, we was looking at these EMAs. Yeah, you've got the 21-week EMA, which is this orange line. Yeah, we was also in this pennant formation, okay, and we hadn't broken a weekly close below it. Okay, we was also looking at the 107,000 line, 109,000 as showing a support. Okay, since then we're breaking upwards, the EMAs are turning upwards, and we've printed a new all-time high, but we haven't got a new, well, this would be a weekly close all-time high if we can close like this today. Okay, but what we want to see is we want to see a weekly close all-time high, but maybe that comes in the coming weeks, or maybe it comes next week. We will have to wait and see. But this is the type of big green dildo surge that you want to see in a bull market. Okay, these monster big candles, and we've got one here. Okay, so let's see if this can hold for the weekly close today. That would be mega bullish, and then we're going to watch this as it plays out over the coming weeks. Okay, but we've got some other charts and news to go through today. So I like to read books from famous investors and traders from the past, okay? Legends in their own right, okay? This is W.D. Gann, yeah? And this is a quote that he wrote in 1939. Don't try to get ahead of the market. Don't guess if it's making a change in trend and be wrong. Wait until it shows a definite change in trend. You will be right when you form your judgment after the definite indication is given. Okay, and I'll take you back to Bitcoin here. Okay, people were getting bearish, okay, when we had this wick here. Okay, I think they believed we was losing structure, we was forming a downtrend, this was a lower higher, this was a complacency bounce, but we hadn't broken these lows. We hadn't broken the 21-week EMA, which is a very key part of the bull market support band and showing support. Okay, now if you want to start calling cycles being over, you really need to start seeing a change in trend, a real change in trend. Broken lows getting broken. Yeah, this is an uptrend. Yeah, we've got higher lows. Okay, all the way up. We've got higher highs. Okay, until that changes, we're in a bull market. Don't be trying to go short on a bull market, okay? It's a big mistake. If you want to go short, wait for the bear market, okay? Or if you're doing it on lower time frames, that's fine. But if you're trying to short the macro trend when you've got higher highs and higher lows and you're above EMAs, It is pure stupidity, okay? And I'm sorry if that offends anyone, but that is the case, okay? So all this time when we're in this formation of higher lows and higher highs with EMAs on the upturn, okay, you have to remain bullish, yeah? Be in your positions and hold until you see a true change in direction, a change of character, or anything to indicate that the markets are topping, and that's where you're going to be taking profits. Taking profits on the way there, of course, as well. You don't try to time the absolute top, okay? But if you stay with the trend, you ride the trend. Your trend is the friend until it ends, okay? And you take profits along the way, okay? And then when you start getting indicators that the top may be in, then obviously you start getting out heavier and heavier, okay? And if you haven't got access to like all those charts on into the cryptoverse and other platforms like that, or you're not that technical with like TradingView and things like that, okay, well, if you go to the bull market peak indicators on CoinGlass, it gives you a list of some of the top indicators that technical analysts use, okay? Things such as the pi cycle top, the pure multiple, things that I look at on this channel, okay, and I will show them on other videos, like the MVRV Z score, you know, the bubble index, all these things, okay. Then go to CoinGlass, okay, and you can find that on the mobile app or on the web page, okay. You can download the app on the App Store, okay. This is the bull market peak indicators, sell at the top, okay. It's saying 100% hold and 0% sell. That means that none of the top indicators, okay, and there is 30 indicators on here. Look, it's 0 out of 30 have been hit, okay. And I'm not saying that you have to swear by this for when to take some money out of the markets, but it does give you an indication that we may have more time to go. And it isn't just with these technical analysis indicators. We're seeing it in the economics as well. And it's been a lovely green week in the crypto markets this week. This is what we're here for, isn't it? Okay. Bitcoin up 12%, Ethereum up 13%, XRP 8%, BNB 19%, Solana 15%, almost 16%, Doge 14%, Tron 1.8, Cardano 12.2, Hyperliquid 12.8, Chainlink 9.7, Sui 15.5, Avalanche 7.3. Yeah, absolutely incredible. Seems like we might be in for some good times for Q4. October may have just begun, nice and early at the beginning. No messing around. Let's get straight into October, into Moonvember. Yeah, and what's more better news is Donald Trump has mentioned about possibly giving all US taxpayers a stimulus check of maybe $1,000 to $2,000. Now, make sure you listen till the end of this 1.5 minute clip from Donald Trump talking in a recent interview. Now, you know what happened when the residents of the United States got a stimulus check back in 2020 during the pandemic, okay? Lots of them aped it into the markets. Now, it isn't necessarily that volume of cash that drives it, because we've got billions and billions coming into these markets all the time, but it's that new retail hype that drives the markets, drives speculation, and drives risk taking. Okay, let's go.
Well, ultimately, you know, because we're talking about a just kicking in, they're just starting to kick in. But ultimately, your tariffs are going to be over $1 trillion a year, in my opinion. The numbers we have now are bigger than they ever were. So when you have $36 trillion in debt a year ago or 2 years ago, and you have a lot less revenue coming in, then you have 37 or 38. It's not 38 yet, but it will be. And the numbers are so much bigger. All of a sudden, 38, you're under-levered, whereas for 36, you were highly levered. We're not highly levered anymore. Now, with that being said, we'll pay back debt, but we also might make a distribution to the people, almost like a dividend to the people of America.
How much are you thinking for that, sir?
Well, we're thinking maybe $1,000 to $2,000. Be great.
So there you go. We'll see if that comes to fruition, eh? Okay, but wouldn't it be nice? Wouldn't it be nice? There he goes. He says that the tariffs are driving revenue for the United States, and they're in a position that they can possibly give back to the people, which is what you'd expect from any good government. You know, I'd love to see something like that here in the UK, but I won't hold my breath. And another net positive from the US government. Breaking: the US Treasury exempts Bitcoin and crypto from 15% corporate minimum tax. Bullish. Very bullish. these are positive things the US government are doing for the crypto industry. However, it's not all rosy, okay? Because with the US government, it means the delay of the SEC approving the ongoing crypto ETF filings for such as Solana, Cardano, XRP, and many others. Okay, so the SEC has halted review of applications for financial products amid the budget impasse that has shuttered the government. In brief, the SEC's decisions on applications for spot altcoin ETFs are on hold during the government closure. Analysts have been expecting the agency to approve Solana funds earlier this month, and the regulator is weighing more than 90 applications for funds tracking different cryptos, combinations of tokens, and digital asset strategies. Investors expecting US Securities and Exchange Commission approvals for a range of exchange traded funds and tracking various altcoins will have to wait longer as the partial government shutdown lingers. Now, some people might see this as bearish, but I see this as bullish because you know what? It didn't make sense for me to see the altcoin ETF approvals come in early in October or mid October because this should be just the start of the Q4 rally. I'd expect to see some huge pumps around some of these altcoin ETFs. I'm not going to say that I think they're definitely going to be market cycle tops, but that is a possibility. Okay, so if these get pushed out now until November, December, maybe that could resemble like the Q4 kind of top for some of these altcoins. Okay. But there is still the possibility the cycle gets pushed out into next year, as we're seeing on things such as the ISM and other indicators being nowhere near hit yet. So let's keep our eyes on that. But like I say, altcoin ETFs push back a little bit, but might not be a bad thing at all. Also, the UK have lifted its ban on crypto, but retail investors still can't buy. What's the hold up? Well, I haven't actually had a hold up in buying crypto. Okay. I use Swissborg a lot and I use transfer to other exchanges from there. I find Swissborg's a really good on ramp because I could send it straight from my bank to my account on Swissborg and it's there within minutes and or seconds even, and I can start sending it off to other exchanges. So that I use that as my on ramp and off ramp. But other exchanges such as Binance was shut off to the UK investors, okay, as an on ramp or off ramp. You could use Binance in the UK, but you couldn't send money to it and withdraw from it as easily. But a lot of the bans have been lifted from certain exchanges now, and this is great news for crypto. But I'm sure they'll get it all cleared up. I think the US government and the UK government are working together to make crypto industry boom so they can all benefit from it. They're going to try and tax the whole crypto industry and make money from it. Let's not be silly, let's not kid ourselves. But it's positive because it means there's going to be a successful crypto market and we can all benefit from it. And the crypto market as a whole, here's the total chart, has made a new all-time high as well, of $4.24 trillion in market cap. Okay, now I've got projections that the crypto market cap could reach as high as 6.6, 6.7 trillion, and then you've got 9 trillion, okay, as a more bullish target, and the extreme bullish target here of $11.39 trillion in this cycle. So if I zoom out and you want to see how possible that is, okay, if you bear in mind the old all-time high for the crypto market was here around 3 trillion, okay. We broke that quite a while ago, saw a deep correction, and then we're in this uptrend, okay, breaking up. These are fib extension targets that I took from this low to the old all-time high, okay, and it's projected us out, okay. Now we are very close to the first fib level target that I had marked off of 4.49 trillion. Like I say, when it breaks that, it could be close to 6.8 trillion, 9 trillion, 11.3 trillion as the most bullish target that I've got set. Can it go higher? Possibly, but it's going to take a while to get up here. So let's just take it one step at a time and see how bullish and how extended this cycle becomes. And Bitcoin has flipped Amazon in market cap. Okay, Bitcoin is now the 7th largest asset in the world, with gold at number 1, Nvidia at number 2, Microsoft number 3, Apple at 4, Google at 5, silver at 6, and Bitcoin is not far from silver, just a few $100 billion away from overtaking silver. I think it can do it, and I think it will do it. I think silver's having a good run at the moment, but there's been a bit of a surge in precious metals, and I do think that will continue on into the rest of the decade. I think people are devaluing their fiat now, and they want more precious assets to hold, more safer assets. So there is a run for gold and silver, but as there is for crypto, okay. And yeah, so I do think Bitcoin will flip silver, okay, and we'll see that very soon. And we are now back in greed. Don't forget, last week we was in fear, okay? So that just shows you how the narrative can quickly change. As I always say, we can spend a lot of time in greed and extreme. As I always say, we can always spend a lot of time in greed and extreme greed as we plow through the rest of this cycle. I was that the last time we see fear, and now until we go into a bear market, who knows? I think the way this cycle's been rolling with these moves, then long sideways corrections, I think that could potentially continue as we move ahead with the cycle, unless the markets start going very parabolic, which I hope they do. But it just seems like more of an institutionally led cycle with this institutional style of trading, and these slow, gradual climbs and corrections all along the way. Generally, putting off the average retail investor because they just can't handle it. They can't cope with it. Unless you're like the type of investor who just, sets it and forgets it and doesn't examine the charts every day. People who are examining the charts every day are really getting ripped up and torn apart in this cycle. But if you've had the balls and the guts to hold on strong, you're doing well right now, okay? And that's the way it goes. The markets like to make the most fools out of the most people most of the time. And here's one of my favorite crypto analysts, Jamie Coutts, known for his work with Raoul Powell and Real Vision. Check out what he's got to say about the rest of the cycle.
Generally, Q4 is seasonally a good period for Bitcoin and crypto. But like seasonality, those seasonality charts are pretty sort of dicey as well in terms of just like trying to look at them as sort of some sort of guide. But generally, Q4 and Q1 are strong for crypto in general. It all really depends on the dollar. The dollar's the massive swing factor here because central banks, although they're cutting in terms of interest rates, which is liquidity positive, but really only at the margin. It doesn't make a massive difference to asset prices. It does to the business cycle, which has a knock-on effect for capital expenditure and consumer spending. So generally all very, very positive. But without central banks actually expanding their balance sheets, then really what happens with the dollar is the most important thing right now to track. So I just constantly look at what the DXY is doing. The DXY had one of the largest declines in Q1, Q2, and really into Q3 in decades. And that's the reason why I think even on, the last time I was on the show, John, was one of the main reasons I published like the Bullish Trinity report, at the start of April saying, I think risk assets and crypto are going to go up a lot. Because of that, the speed of that decline was so significant. Now we're seeing the DXY sort of hold around sort of 90, 98, 99. It really matters. The next leg of that move, whether it's a retest of 101 or a breakdown below, will, I think, be incredibly important for risk assets. My view is that we'll probably test around 100. And so it might be a couple more weeks of chop. But eventually with interest rate cuts and what Trump is trying to do with best interest to try and bring the dollar down, that there is another leg lower. And so at some stage in Q4, maybe in November, we'll start to see crypto start to really catch a bid again. But, there's probably some assets that are worth buying right now with a view to the next sort of 6 months being particularly good.
Gotcha. So you're anticipating, so just to kind of recap this section, global liquidity is still rising and we've had the Treasury general account refill, where they, like you mentioned, they extracted about $500 billion of liquidity from the market, which dragged liquidity and dragged crypto. Now that's over, or about to end. And so the bull run can continue. And you're saying maybe some more chop, but eventually, as we get deeper into Q4, you're expecting this to go higher. I think that's something that a lot of people have been wondering about, and I want to get your thoughts on this too. Is now that the Fed has started to cut interest rates, we've got one cut in September. We're expecting to get another one in October. Some people are saying even another one before the end of the year. How important is that for crypto markets in your mind? Does that have a big impact on digital assets? Is it going to impact Bitcoin, but not the rest of crypto? How big of a deal is this, or is this already priced in?
I think it's important for financial conditions in the business cycle. So cuts will, I guess, supercharge the ISM and bring it back above 50 and sort of, I think, continue or accelerate the improvement on that end. But I don't think it's as important for like just asset prices in general. I think asset prices respond to more of the quantitative policies from central banks. And at the moment, even though it's marginal, the Federal Reserve is still tightening its balance sheet. They're still conducting QT. So I don't expect them to change. Like we don't have a federal a Fed chief that's, I think, going to, while he's in charge, retire that policy. But it's coming to an end at some point. So whether it's with the new Fed chair next year, if you just look at the way central bank balance sheets have always clipped major turning points in crypto, I think that's more important than interest rate cuts. But that's not to say that they're not important, because the business cycle needs interest rate cuts. Interest rates are too high relative to the economic growth. They need to bring that down. They want to bring that down, interest rates down, so that they can unlock equity in people's primary asset, and sort of spur economic growth through the property market. So all of these things are definitely positive for crypto, but it's not the good old days of the 2010s where it was QE2, 3, QE infinity, and everything just responded on a dime to those quantitative measures. But I think those policies get retired, and also there's probably another trick up their sleeve with adjusting, like the government adjusting the SLR, the supplementary leverage ratio for banks, so they can increase liquidity into the market through more lending. So that would be, that would directly flow into M2.
As you saw there with Jamie Coutts talking about the DXY, okay, looking for a weaker dollar to drive these markets on, as interest rates don't seem to have so much importance. But yet again, he did say that interest rates help drive the ISM, which we're also going to look at. But first of all, looking here at the dollar, okay, and the dollar is currently sitting at 97.7, okay. Now we do look at this long-standing trend line, which goes back to 2008, okay, and we're literally on that trend line as we speak. So we zoom in on a lower time frame. Let's take this down to the daily, okay. And we can see that the DXY has started to break trend, okay? Now, this doesn't mean that, it's not a completely perfect inverse correlation with Bitcoin, okay? So we can have the DXY go up a little bit while Bitcoin's going up, okay? But if we were to see this come and break down past this level and head back to where it's been on previous cycles, let's look at it like, okay, so down here at this like 89, 88 level was where we were in previous cycles. Look, here was 2017, 2018, okay, and here was the 2021 cycle, okay. So can it go back down to those levels again before seeing a big reversal? Now, this is quite a big distributional pattern that we saw here, okay, breaking down, and this is still in a downtrend. So whether it's broken this on a lower time frame, okay, on the daily, okay, if I flip it back to the weekly, let's look at that trend, okay, it literally broke it last week, okay, and then it's starting to break down again now, okay, we're breaking back down against these levels again. So we really want to see what happens with this over the coming weeks, okay. But like I say, it's still positively down in a downtrend. Okay, it's below the 50-week EMA. It's below its 5 and 13 EMA. And if I put the 21 on there, let's see where that is. 21. You see, it's failing to get above any of these EMAs. Okay, it's failing for the 5 and 13 to cross bullish. Okay, for the DXY. Therefore, it could be testing, as we've seen. It's been riding on this 13-week EMA, and it's failing to get above. So we could start to see a drop in the dollar very, very soon. And if you've been watching me here on this channel, you know I talk about the ISM quite a lot. Okay, and the ISM managed to get a higher print last week. It had a forecasted projection of 49, and it got 49.1, so slightly above expectations, which is great news. Okay, because we want to get above this 50 level to show expansions in the market, as we've seen it did in 2021 and 2017. So we are heading in the right direction. Okay, and if we zoom in, we've got the 5 and 13 weeks now crossing upwards. Okay, now some people would say don't do technical analysis like that on the ISM, but EMAs are trend-based indicators, and we are watching for them getting above. Not only that, okay, so the 50 level is the famous level that markets want to see the ISM above to give confidence that the markets are strong and healthy and heading in a positive direction. Okay, not only that, you've got the 50-week or 50-month EMA, sorry, so these are monthly EMAs, sorry, coming down to that level as well. So I would believe that next month's projection, so like an early November reading, hopefully we can get that with the government shutdown. Luckily, this come in just as the government shutdown. We got that reading. I was really like hoping that we was going to get the reading on the ISM before the shutdown. And I think it was great that we did, because I think this is helping to drive the stock market and the crypto market upwards while we're in shutdown. So this could be one of the reasons. If you ask yourself, why is the markets going up while we're in shutdown? Maybe it's the ISM heading in a positive direction. Therefore, the markets can continue doing what they're doing and keep the bull market going. So great news to see a 49.1 reading on the ISM this month. So it's a little bit too early to be forecasting the ISM PMI for November, but as we can see, it will come out on Monday, the 3rd of November, and that will be the following week after the federal funds rate decision on Wednesday, the 29th of October. So after the 3rd of November, I will do my next macro update, and in between now and then, I will do some videos on altcoins and some deep dives into ecosystems and some low cap gems, and call some good cryptos for you to take a look at, and we'll be analyzing the charts on those in the coming weeks. So if you like this content, make sure you're liking, subscribing for more videos as they come out over the coming weeks. Next up, we want to look at the HDX, which is the housing sector in the US. Okay, now this is all to do with the 18.6-year real estate cycle. So back in 2005, okay, this found a top, okay, and then in 2006 it made a lower high, and then that's when we started to see the decline in the housing market back down into the 2008 financial crisis, the GFC as people call it. Okay, now I want to show you what's going on in today's cycle. Okay, so back in October 2024, okay, this thing made a new high. Okay, corrected into a large correction back down into April, and with the stock market and with the crypto market, it's gone up and what looks to be a similar lower high. Now this isn't set in stone yet. Okay, so let's put the EMAs on there. Okay, they're very bullish. Now if this was a chart for like crypto or stocks, I'd be saying this is bullish. This is still in an uptrend. There's a good chance this is going to break this high. But we have, until it makes that new high, we cannot make that assumption. At the moment, it does look like, this is on a weekly chart, it does look like a lower high. Okay, but we don't know. It could be a higher low and then continuation. The stock market tends to go on for a bit longer than the housing market. So what we're going to show you now is if I go back to 2008 and then I overlay the S&P 500. Yes, so now you see that this was following, okay, and then this is back in 2006. Okay, the housing market fell off a cliff. Okay, and yet the stock market continued into 2007. Okay, and then it found its way down to follow the housing market down into 2008, 2009 as a low. Okay, that was the SPX. If I take that off and now look at the NASDAQ, there you go. The NASDAQ continued on afterwards as well. Okay, see that? Yeah, and then it fell down into 2008. Okay, so the stock market will continue longer than the housing market, but what you're looking for is cracks in the real estate cycle to indicate that the stock market is running on borrowed time. Could it be a year or two? Yes, quite possibly, but we'll have to wait and see. But while we're in shutdown, it does mean that certain economic data is unable to be released. Okay, the US September non-farm payrolls report was not released due to the government shutdown. Okay, so as it shows here with Jerome Powell, he will be making a Fed's fund rate decision potentially at the end of the month if the government's reopened in time, which I believe it will be. There's only been a couple of times in history where it's gone, only one time, in fact, where it's gone more than 30 days. Okay, so, or around 30 days. Okay, so, yeah, he might be running blind. He might have to, still cut because he hasn't got the data. So as he saw it last month, he cut. And I think this is why we're still getting these high probabilities of the rate cut, despite them not having the data. And as you can see here on Polymarket, there is still a 90% chance of a 25 basis point decrease and 3.4% of a 50% decrease. Very low chances of no change or a increase. So things are still looking good for the rate cuts. And also on Polymarkets, we see that they're predicting that the government shutdown will end on October 15th or later with a 68% chance. So before that, so for a October 6th to 9th, only an 8% chance. Okay. So, and then 10th to the 14th, 23% chance. So good chances are the shutdown will end within the next couple of weeks by mid to late October. Okay, so yeah, that's interesting to see. We'll see what happens. Hopefully, the markets can keep surging throughout this shutdown, as they have done, as we indicated in our last video. So make sure you go and check that out. There's more in that as well. And we predicted that the markets would keep on rallying into new all-time highs beyond the shutdown. And if you're like me and you follow Henrik Zeberg, okay, he's an advocate for a big blow off top in the coming months, followed by a recession. So please don't get alarmed by me showing this as recession targets and recession possibilities. Okay, the Fed is too hawkish. History shows they tighten into rising unemployment, exactly what we see now. Fed's fund rate remains well above inflation, keeping policy restrictive right into a recession. Ironically, their past dovishness post 2008 fueled the everything bubble. Now, they should have cut long ago. Okay, this chart shows very similar indications to what we saw around 2000 and early 2000s. Okay, with the unemployment level rising up. Okay, with the recession indicator rising up. Okay, and yeah, so there is a chance that we are going to see a recession after we've seen a mania phase. But that's all part of a cycle. Okay, in the cycle, you get all of these stages. Okay, leading up into mania, euphoria, followed by complacency, capitulation, fear, and panic. Okay, and all of these things happen, and the recession will come and will be at its worst during the fear and panic. And that's a time where hopefully you're going to make a lot of money from this cycle and you can start buying the biggest dip that you've ever seen in your life. So make sure you prepare for that. It's not yet. You don't have to panic yet, but make sure you take profits in this cycle so that when this happens And this could happen a year or so away. Yeah, it could be 6 months or a year away. And by the time it gets to the bottom of that recession, it could be a couple of years away. So make sure over the next months to a year, you're taking heavy profits from them. Whatever the market gives you, whatever the indicators are telling you, take those profits along the way and get into dollars. Not financial advice, of course. We don't do that on this channel, of course. But, just make sure you're getting some heavy cash positions ready for that next recession, because that is, if this cycle is not going to make you a millionaire, that will make you a millionaire buying low as we start a new 18-year cycle. So looking at some potential top signals or local top signals that the cycle is going to give us in the coming months. Okay, the US Treasury has less than 66 days left to map out America's Bitcoin reserve plan. Okay, so in 66 or within 66 days, we could be hearing that the US has decided it's going to buy Bitcoin. As we saw in 2021, when El Salvador started buying Bitcoin, that was the top. Okay, so when America starts buying Bitcoin, that could actually be the top. Okay, a heavy top signal for investors. Okay, so keep your eyes out for this one and keep this one on your radar. And another one that you want to be looking at as a cycle top indicator is the CME Group to launch 24/7 crypto trading by early 2026. Another top signal we saw in 2017 was the launch of futures trading. When they launched futures trading for Bitcoin, it was the top of the cycle. So another one to watch out for. Obviously, this extends it out, doesn't it? Because what I just showed you there with the Bitcoin reserve being, possibly within 66 days, which would take us out, a couple of months, maybe into early December. Okay, you've got the CME Group to launch crypto trading 24/7 by early 2026. So that pushes out maybe into January, February, March of Q1 of 2026 possibly. So, there's different news stories that could call the top. So I think what you need to do is watch for the fundamental news like this and tie it in with your technicals and your indicators and your economics. BlackRock Bitcoin holdings now have surpassed 777,000 Bitcoin, worth over 90 billion, the fastest growing ETF in history. And I'm seeing various different numbers being announced, but BlackRock have bought $791 million worth of Bitcoin this week. Okay. As we saw earlier on that week, we saw 446 million. So the numbers were changing a lot. And also, they're buying ETH too. Just in, BlackRock buys 206 million worth of ETH. So they're loading up. They know something. Something's coming, okay? And here's Henrik Zeberg talking about how we start getting into Altseason now, and we're actually probably already started it.
So all the liquidity that comes in now, and look at the stock market, it's doing great. Look at Bitcoin, look at everything, and especially in that phase where you start to see the rotation into smaller to larger risk, which will be small caps, which will be altcoins and so on. That's an amazing journey. I mean, you'll see some of these going up 10 times, 50 times, and that's where we have the altcoin vector, which is a report and the signal, because there will be some of these that starts to move, and they can move a lot. We are in that phase already, and people say, "Where is the Altseason?" That's what I'm trying to say. The Altseason is here. The Altseason is when we start to see Ethereum outperforming Bitcoin, and you are definitely seeing that. So now we start to see that rotation. So Solana-based digital asset treasury companies may do well if Solana starts to do well. I think they will, because you're seeing the Bitcoin rotating into to Ethereum, rotating into Solana, rotating into something else. And in 5 to 10 weeks from now, it will be a completely different kind of risk environment. And some of you guys will also say, "Oh, Henrik must be wrong, because I've been, we're seeing things going straight up." Remember, that's what I'm saying. Things will go more or less, some of them go almost vertical for some of these things. And that's where we want to ride that. That's what we do at Swissblock. We want to ride that. We're not naive. We know how things work, and at least we think we do. And we want to be part of that rally in altcoins. So that's why we have the altcoin vector report, which has helped us to give an impulse. When does it start to move? It's always about when, and then an Elliott wave extension telling us how far can it move. So that's what we want to we do with that one. And then we also have the reports on Bitcoin and the likes. But that was more about how I see Solana and the likes. I think it's part of that, and of course there will be these digital asset treasury companies that will benefit from that, because if they are loaded up with Ethereum and other things and Solana and so on, then they will obviously be benefiting from that in a certain period.
So as Henrik said there, we are possibly already in an alt season, as we are already starting to see the rotation. Okay, so this chart here might be saying that we was in alt season and we've dropped back out of it, but we are in this alt season trend. Okay, the high numbers up here are where you want to be taking profits, not where you want to be told that it's alt season, now's the time to get in alts. No, the time to get in alts was down here. Okay, and now we're riding the alt season wave upwards. And as he said, you've got big institutional companies accumulating some of the biggest cryptos, such as Ethereum, Solana, Sui, Avalanche, XRP. There's a lot of institutional accumulation been going on. So I really think we're ready to see that next wave soon. And it just gets more and more bullish now for crypto in the United States. The US court has ruled that Bored Ape NFTs and ApeCoin are not securities under federal law. So you might be thinking, well, what does that mean? It's Bored Ape Yacht Club and ApeCoin. I don't hold them, or that's nothing to do with my bags. This means everything for your bags, okay? Because if ApeCoin, a meme coin as such, okay, there might be some utility behind it. It's a meme coin and it's not classed as a security. That means most of your altcoins are probably not securities. This is great news. And NFTs as well. It means that NFTs are not securities. This is great for the crypto industry. And a quick look at Bitcoin dominance. Now, I like to leave this. I know this is an old pattern now, but I love to leave it on there just to show where we're coming from. Okay. So we had this big pennant formation and we fell from it and we fell below the 50-week EMA. Okay. Now, even though Bitcoin dominance has come down to 57.5% and then started to make a move up and it's now above 59%. Okay, there's a whole lot of resistance here. Okay, we've got this newer trend line that I'm drawing on now. Okay, which goes back to this low and back to these lows and then back to this low. Okay, so it's quite historic. It goes back to 2023. Okay, and now it looks like the rise is going on to retest that. And then you've got the 50-week and the 13-week above us. So yeah, we've got a whole lot of resistance here, let alone horizontals. Okay, this would be a massive level here at 60%. Okay, you've got that there, you've got there. Okay, look, that was resistance, it was support, it was support. It would probably find it as resistance again if it gets there, because look at the 50 and the 13-week coming down below it. Look at this trend. Yeah, there is a good chance that this is in a downtrend. So you have to be bearish on Bitcoin dominance now. You might hear people being bullish about Bitcoin dominance, saying, it's going to surge massively as Bitcoin rises. But, that is a potential. But regardless, this thing has topped cyclically where we are now. This thing has topped. And then we've got Jason Pizzino here talking about we've been here before and we have seen the outcome. The ideal scenario now is for Bitcoin and crypto on this chart is a minor rally followed by a major dump. Okay, so as you can see, it's testing these lows here. He's saying what he would like to see is a minor rally of USDC and USDT dominance and then a collapse through. Let's have a look at that on the chart, shall we? So this is USDT dominance plus USDC dominance, okay? And as Jason was showing, okay, it's riding across these lows here. And what he was saying he'd like to see happen is a little minor rally, and then a collapse, okay? Maybe he says he would perhaps see more conviction with it after the minor rally touching the EMAs one more time and then breaking down. But I don't think it matters too much. I think if we can start to see it break down, that would be great. Okay, so, and also you've got this as resistance here, this line here, which is, as you can see, it's resistance here, it's support here, it's been resistance on these higher highs. Okay, and now we hopefully are starting to see it break down. I think, yeah, as Jason says, could see a little rally first and then break down. Nevertheless, hopefully see that head down. And I have been saying in my other videos, I believe that the stablecoin dominance has been held up so strong because they keep minting billions of stablecoins every month, every week, and I believe they're all going to get unleashed in the markets soon. And as you can see, stablecoins just keep increasing. The total market cap for stablecoins is now sitting at over $300 billion. And in DeFi now we have 167 billion locked in TVL, and that keeps growing too. Let's zoom in and take a little look, shall we? Okay, look, TVL in DeFi making new all-time highs. The crypto market is healthy and strong for the rest of this bull run. And now taking a look at where we are in our alt season. Okay, so ETH officially bottomed against Bitcoin back in April. Okay, it made a great strong move, and it's been pulling back since. Okay, now Bitcoin is starting to make a move now. We're starting to see dominance rise a little bit as ETH pulls back. Remember, ETH BTC is the inverse of Bitcoin dominance, pretty much because of ETH's market cap size. Okay, so once ETH can get a bounce from this correction, and it has been correcting for 1, 2, 3, 4, 5, 6, from the top, say several weeks, okay, of correction. And as WD Gann would say, most corrections last several days, several weeks, several months, okay? And this is a several week correction so far, and the EMAs are still bullish. It could be getting a bounce here off of this 13-week EMA, okay? You've got the 21-week having a golden cross on the 50-week. Okay, so this could start making a move soon and overcoming the 200 week EMA. Okay, the last time it did that, okay, was around late 2020, early 2021 when we saw the surge, which was an alt season. And if you've been watching my videos, you will be familiar with this chart. This is my total free chart with all the emotions mapped out. Okay. And we are really trying to break out on a new all-time high for total free. Let's see, what is the actual high at the moment? It has been set this week, I believe. So the highs are over here. So let's zoom on that with the daily. Okay. And the all-time high is sitting at here around 1.18 trillion. So we've tapped it a few days ago, okay, and we're looking at trying to break out. But either way, we're breaking out of the old all-time high over there, which was the peak euphoria of 2021. And when we look at where we are in the stages of this cycle for altcoins, total free, so that's obviously excluding Bitcoin, excluding ETH. This is the rest of the top 10, okay. We are looking for this to break out into its belief phase, and then we would get a correction and a thrill and a correction and then a euphoric stage of the market. So maybe that's later this year or early into next year. We don't know. I think looking at the time we've got till the end of the year, I believe for this to play out the stages of the market cycle, and now it can do this on if you look at 2021, look how quickly it went through some of those stages, yeah? Way quicker than Bitcoin, okay? Bitcoin's a slower moving asset. The altcoins will move faster in their alt season periods. So could it happen before the end of the year? Yes, it can. And where could it get to? Somewhere probably close to these 2 trillion mark, okay, for total free. And then others is lagging behind total free still, as we know. Most of the altcoin market is seriously lagging behind the big caps, but the time will come, and this is still an uptrend. Okay, let's zoom in closer for you. So this is on the daily, okay, and the EMAs are bullish, and they're starting. Looks like it's starting to move up again after this dip into late September. Let's look at it on the weekly, okay. The weekly EMAs still nice and bullish. Okay, the next level you want to see it take is this 350 billion level around here. Then you've got 450 billion. Like I say, still very much a nice clear uptrend with lower lows and higher highs. And we are waiting for that next higher high. And that next higher high will be an all-time high for altcoins, for others. And if you're talking about we're at a 300 billion now, and we're talking we could get above 450, 500, 600 billion, okay, in others. This is going to be fantastic for your bags, okay? I know it's felt like it's taken forever, but this is a bullish chart. This is a chart that's climbing. And as you start to get there, you will realize that we are about to enter into like a parabolic phase. And don't forget where we are with total free against Bitcoin. Okay, what we are starting to see are the early signs of a reversal here, with the EMAs starting to tick bullish. Okay, we've still got to break all of this downtrend, okay, and see where we go. Now, where does this perform cyclically against Bitcoin? Because 2017 and 2021 saw a lower high on this chart. So, even if we was to say go into a lower high, let's draw a trend from there right down to there. Okay, and we're talking about diminishing returns in this cycle. Okay, so we could still get up to here, and that would be a fantastic move for your altcoins. And then we look at others BTC and can see we're seeing a similar type of thing, but yet we're still held under the 50-week EMA. But we are now above the 5 and 13. We're retesting the 21-week. Okay, next stage would be to get the push up past the 50 and past this downsloping trend line. Then we could start to see a long-term macro uptrend for altcoins. I believe that when I look at a chart like this, that it tells me that it's not going to be a short period of a matter of a few weeks of alt season that we're waiting for. We're waiting for months of alt season, 5, 6 months, maybe longer, of coins outperforming Bitcoin. And that would be just so good. And we've got all this to come. So we didn't get a chance to go through all the altcoin charts today because we've run out of time with so much news and charts to do with the macro bigger picture for crypto and the economics, the fundamentals behind the cycle, and a lot of cyclical information that I hope you found useful. But that's fine, because in the next video, we're going to break down some of the best big cap cryptos, many of which I'm holding and some I'm not holding. We're going to talk about like the crypto technicals, because we've just gone through a lot of the macro stuff today, and I don't believe much of this is changing until the end of the month. So at the end of the month, we're going to get the Fed funds rate, and then we'll get in early into November, we'll get the ISM. We're watching the things like the DXY and Bitcoin dominance on the weekly charts anyway. So next video, all about big cap cryptos, some of the biggest performers, best layer ones, best dexes, and some real good crypto projects that you need to know about if you don't know already. And if you're already holding them, you'll be interested to watch me go through the charts and see where we can potentially look to take profits, or where we need to be looking to get our orders in. So if that sounds good to you, make sure you join and subscribe and click like, and I'll see you on the next video.